think the market is weighing two types of numbers right now, right? They have the impact of earnings. I think that's well within the market's ability to digest. But the harder insecurity for the market is what next? What does Q3 look like, especially for some of these stocks that have higher revenue impact coming from Europe and elsewhere, given that we're going into a second lockdown light version in Europe and sometimes more onerous lockdowns. I think it's that outlook that continues to bring uncertainty to the market, and hence this gyration between value and growth, and the market trying to find where exactly it wants to call its level, and hence the volatility over the last week.
We were discussing this morning about the market being so fixated on this fiscal stimulus, and they're waiting it out till after the election for some news flow to cross about the size of the package, when it will be received. How necessary is it at this point, given we are seeing this concern around the second wave of infections and even lockdowns being required in Europe?
I think the fiscal stimulus is important for the household balance sheet, right? Fiscal stimulus takes a while to work through the economy. That's point number one. The second point is that the fiscal stimulus is going to support income, and it's a great buffer to income devaluation for a lot of households. However, where markets are concerned, the Fed put, the ECB put on the markets is far more relevant when it comes to looking at the trajectory of where the markets may go. In terms of the fiscal stimulus, it's a good pop of news. And of course, it will help stave off or delay a series of bankruptcies, especially in the small and mid-cap sectors that may otherwise have been more imminent. However, from a market valuation perspective, apart from the short-term pop, it's not going to really impact the trajectory in the short term in a meaningful way, because that's really being driven by monetary policy today.
Sunaina, let's go into monetary policy then. We had the ECB meeting yesterday where Madame Lagarde signaled a very dovish outlook for the European Central Bank, emphasizing over and over again in that press conference that the staff members are looking at all instruments, emphasizing that S, that they're looking at their entire toolbox when it comes to more stimulus that they could offer. But it doesn't seem to have made a major difference to markets just yet. So how do you see that additional stimulus changing the narrative, if at all, for Europe?
I think in Europe, we have to see the ECB come out with other ways to support specific asset classes better. So what we've seen the Fed do is enter markets and become the floor, buy bonds at various parts of the cap structure to buoy that market, make sure there's no dislocation there. We've seen the Fed enter other markets, potentially even stocks. And I think that that's what the markets are looking for the ECB to do. The language is dovish. Well, it's been dovish for a long time. It will continue to be dovish for a long time. That's not going to be what buoys the market. What really gives the market its flow in Europe is seeing the ECB go into dislocated markets and be the buyer there, provide the flow there.